Today, we're going to do something a little different. We're going to tell a story. It's a journey that starts with numbers and theories, but I promise it ends with a much smarter, clearer plan for your financial future. So let's dive right in.
So, let's meet our hero, Arjun. He's probably a lot like many of you. He's a young professional, he's worked hard, he's managed to save up a bit of money, and now he's staring at it, thinking, okay, what now? How do I make this grow? He's not looking to get rich quick, he wants to do this the right way.
And this quote right here is the heart of the entire problem. It's the fundamental challenge, the tightrope walk that every single investor has to navigate. It's not just about chasing the biggest returns possible. No, it's about getting the best return for the amount of risk you're actually comfortable taking on.
So, Arjun's journey begins here, trying to figure out this dilemma. He's got to get a lay of the land, you know? He needs to understand the basic forces at play before he can even think about making a move.
In this table, this is pretty much the rule book. Arjun looks at this and a pattern just jumps right out at him. You've got equities, stocks, which historically have given these amazing returns, but they also come with a ton of volatility. That's the risk part. And way down at the other end, you've got things like treasury bills. Super safe, but, well, the returns aren't exactly going to set your world on fire. It's the classic trade-off. No free lunch.
And this brings Arjun to a really important moment of self-reflection. And it's a question for you, too. I mean, really think about it. How do you feel about that trade-off? Are you the kind of person who's okay with some wild swings for a shot at higher growth? Or does the very idea of your account balance dropping send a shiver down your spine?
You know, there's actually a theory for this. It's called utility theory, and it basically just confirms what we already kind of know. Most of us don't like risk. We're risk-averse. So for Arjun, the goal isn't just to make money. It's to find that perfect sweet spot, the portfolio that gives him the best possible shot at his goals, but in a way that still lets him sleep soundly at night.
Okay, so armed with this new self-awareness, Arjun is ready for the next level. And this is where he discovers the single most powerful tool for an investor. Honestly, it's a concept that is going to completely change the way he, and hopefully you, think about building a portfolio.
All right, so forget everything you've heard about trying to find the next Apple or the next Amazon. The real secret weapon, the idea that the entire field of modern finance is built on, is something else entirely. It's not about the individual ingredients. It's all about the recipe.
And that big idea? It's diversification. But here's the key. The part that people often miss. It's not just about owning a whole bunch of different things. The magic is in owning assets that don't move in lockstep. You want some of your investments to zig while the others zag. That's what smooths out the ride.
And this slide right here perfectly explains why it works. See, diversification is like a magic wand for what's called unsystematic risk. That's the risk of, say, one specific company messing up. Poof, you can make that risk basically disappear. But what you can't get rid of is systematic risk, the risk that the entire market goes down. Here's the takeaway. Diversification helps you eliminate the risks that you don't even get paid to take. It's a no-brainer.
So once Arjun understands how to use diversification to manage risk, a brand new goal just snaps into focus. It's not about just building a portfolio anymore. Now it's about finding the absolute best possible portfolio he can build.
And this is where we meet the efficient frontier. Just imagine plotting every single possible portfolio combination on a chart. The efficient frontier is this beautiful curve that connects all the gold medal winners. Any portfolio that falls below this line is, well, inefficient. You could always find a spot on the line that gives you more return for the same risk or the same return for less risk. It's the map of what's optimal. Now brace yourself, because this next idea is absolutely mind-blowing. It's called the two-fund separation theorem. And it says there is one single best risky portfolio on that entire efficient frontier that is the right one for everyone. It doesn't matter if you're a super aggressive investor or a really conservative one. The only thing that changes is how much of that one perfect portfolio you mix with a totally risk-free asset, like those treasury bills from before. It's a revolutionary idea.
So, Arjun's figured out how to build his own perfect portfolio, in theory. But how does that scale up? How do we take these personal principles and create a model for understanding the entire market?
Well, that brings us to the big one, the Capital Asset Pricing Model, or CAPM. This is one of the cornerstones of modern finance. It's a model that tries to answer a really simple question. For any given stock or bond, what kind of return should I expect to get for the risk I'm taking? And crucially, it says that expected return is tied only to its systematic risk.
So what is CAPM really telling Arjun? First, the only risk the market rewards you for taking is that unavoidable market-wide systematic risk.
We measure that with something called beta. If a stock has a beta of 1, it moves with the market. If it's 2, it's twice as jumpy. This relationship can be drawn as a straight line, the security market line. And that line becomes a powerful yardstick. If a stock is projected to return above the line, it might be a bargain. If it's below, it might be overpriced.
Now, let's zoom out. When we apply this same logic not just to one stock, but to a whole diversified portfolio, that best possible path gets a new name, the capital market line, or CML. It shows the absolute best risk-return combinations you can get by mixing the entire market portfolio with a risk-free asset. It's the ultimate path.
Okay, so at this point, Arjun is feeling pretty smart. He's got this beautiful, rational, mathematical framework for investing. But then he realizes there's a huge, messy piece of the puzzle that he's completely ignored, the human factor.
Because let's be honest, in the real world, we are not perfectly logical creatures. We're human. We're driven by fear, by greed, by excitement, by panic. And those emotions can take the most perfectly crafted investment plan and just toss it right out the window.
And here are just a few of the classic mental traps we all fall into. Loss aversion. That's why a $1,000 loss hurts way more than a $1,000 gain feels good. Overconfidence, thinking we're smarter than the market. And status quo bias. Just sticking with what we have, even when we know there's a better option out there. We're all guilty of these.
So how does Arjun fight his own brain? How does he protect himself from himself? He realizes he needs a system. He needs a plan that he writes down and commits to before the market gets crazy and his emotions are running high. The goal is to make the smart, logical decisions now so he can just follow the rules later.
And this is his weapon, an investment policy statement, or an IPS. You can think of it like his own personal constitution for investing. He literally writes down his goals, his financial limits, his exact risk tolerance, and the strategy he's going to follow no matter what. This document becomes his North Star, his anchor in a stormy sea.
And that brings Arjun's journey and our story to its final and most important point. All these amazing theories we've talked about, they provide an incredible map for navigating the world of investing. But at the end of the day, you're the one in the driver's seat, and it's your own psychology that has its hands on the wheel and its foot on the gas. Understanding both the map and the driver, well, that's the real secret to reaching your destination. So the only question left is, are you ready to take the wheel?